And I think fantastic. We are live, everyone. Very first YouTube live, Twitter Space live, and it's actually quite a premiere because it's Fabio and myself doing it actually in person. We are meeting for our company's kickoff for 2023, and yeah, we've never done it actually in person. Quite nice.
We're in an undisclosed location, somewhere deep underground in Europe. Yeah, first time in person, first time in 2023. Super excited about the year.
Yeah. And we have quite a cool topic for today. So we're going to talk about your video and yeah, then we're really going to talk more about the actual relevant topics, which is yeah, discuss a bit the macro, discuss a bit crypto trends, and we have a few topics that we kind of like what's going to be the best investment, what may be a disappointing investment, who's going to be the villain for 2023. We had so many villains in 2022. Who's going to be the winners, the losers? I don't know. Is there going to be surprises? What are going to be the disappointments? Things like that. So yeah, I don't know what Fabio's going to say. I just shared a few of my notes. So yeah, I am sure Fabio's going to have different opinions than I have on certain topics. And yeah, it's going to be quite interesting. Yeah, let's get going.
Let's get going. We already had a brief 10 minutes back and forth, just a few topics that we bounced off each other. And there's definitely going to be a few points that we agree and a few that we probably don't agree. But this is what makes it even more interesting. I don't know, what do we start with? Cake specific, macro specific?
Let's do a quick summary 2022 so that we have a bit of a kind of liftover to 2023. Why don't you get started? I don't know, maybe the 1 minute summary of 2022 that sticks out for you.
Okay. So funny side note, the undisclosed location that we are right now, exactly 1 year ago, we've been here as well. And it feels like this was 10 years ago. But it was just 1 year ago. And so many things have happened since then. Back then, it still felt like a bull market, even though we dropped from 69 to I think 45K when the year started. But it felt just like a buying the dip opportunity. And I did not expect that 2022 would turn out as it did. So from a prices perspective, it was devastating, especially in crypto. I guess general markets, it was not that bad, actually. We had like a 20% correction and we're just hanging in there. From a company perspective, the first half was crazy regarding growth, both team-wise and customer-wise. I think it was the best 6 month on both.
Yep.
And the second half is maybe a little bit of not a pause, but like going inwards again, setting up a next base camp, cleaning up a few things, and getting ready for what's to come this year. And product-wise, I guess the most interesting is Earn, definitely, because it's just, I think, a very revolutionized product, especially for, let's say, newbies, because it's pretty much a one-click thing that you're able to participate in real DeFi products without actually knowing anything about it. And you have like these the volatility protection that is super interesting for people that don't want to do deep dives and really go on a DEX and hold their own private keys. So I guess product-wise, Earn is definitely my highlight. And yeah, what about yours?
Yeah, I think I came into the year last year, I think more pessimistic than probably most people. I think I was, but I definitely wasn't pessimistic enough. Sometimes I ask myself if I also got drawn in a bit too much into the hype. I don't think so. I don't know if I would have ever been a person that would sell all my crypto or go short crypto. I don't think so. So from an investor standpoint, I think the thing that I missed as an investor was getting exposure into commodities. I think that was a bit more obvious. And that could have been something. Also, you looking at Buffett. Buffett did very aggressive commodity plays last year and cashed in big time with very relatively low risk. And I definitely didn't do that. So that's maybe the biggest lesson for me. I think from a company standpoint, I think in Q3 we took a bit longer than I would have loved it to be, that we transitioned with the marketing approach with I think that was in 2023 it took us really a bit. I don't know, in the first half I think we didn't I think the first half we played really well, despite the market really dipping.
Yeah.
I think it was in the second half where we could have done way faster in Q3, and then it took us a little bit to restructure and kind of, with the team and processes. So I think that was a bit of a I think we lost maybe 2 months or something. Also on the product side, I think people really felt it. I mean, some of it probably was self-inflicted, and other parts were really inflicted from the market.
Yeah, yeah. Probably we were, I think, 2 months late to the party with ETH staking. Like, it didn't matter so much because it caught on pretty fast, and our customers really liked it, especially the secondary market. But yeah, there's definitely like right now, you probably know, because Julian mentioned this. I think the last Twitter space of last year, that we have some nice product lined up over the coming weeks. So yeah, we're gonna definitely make it an impactful 2023, regardless of market conditions.
Yeah, and I think we're gonna discuss this more. I think from a company standpoint for 2023, it will be key to stay nimble. I think for all the companies, I think the good crypto companies in 2023 are those that are gonna get market share. They're not going to focus so much on the short term, because I don't think there's going to be winners in the short term in 2023. I think the winners in 2023 are all those that are going to play this, maybe not even for 2024, because I know that this is the big hope right now, that 2024 is going to be, with Bitcoin halving, it's going to be this up year. But it's just how it is. When everyone hopes or expects Bitcoin halving to have an impact, it may not have an impact. Maybe the impact, I mentioned this a couple of times, I think the next bull run is going to happen later than most people expect. In return, it's going to be more vicious and violent, and it's going to finish earlier than most people expect. So people will always be late to the party, they will be late to buy, and they will be late to sell, just like as most of the time. So if the majority thinks, 2023 is going to be a sideways year, or it's not going to be the best year, but Bitcoin halving Q1 2024, then it's not gonna be that, right? It's going to be maybe Q2 2024, and that's when it's going to start. Then people are too optimistic too early, then they get disappointed, then they actually miss the run, they don't believe it, they're incredulous, then they're gonna get into the market, I don't know when, let's say end of 2024, but then the bull market, and then they think, it's gonna go until the end of 2025, but then it finishes earlier again, and everyone gets slaughtered again. So that's just where I kind of, and you will see this in the entire theme today, where what I believe are gonna be the winners is gonna be the strategy right now. And I think as a company, it also is going to be really important that you don't expect the immediate returns 2023, but what you do right now is is sowing so many seeds so that you can harvest them later on.
Yeah. I guess it's always the thing that you mentioned. It's connected to what is the most painful outcome, and I guess we saw that both with the top, that everybody thought we're going to 100K, we didn't. And everybody thought we're not going to go below all-time highs. Yeah, and we did. And I saw a very interesting video, a guy that I'm following since 2018, Bob Lucas. I guess many of you will know. He has exceptional videos on these 4-year cycles. And I know for a fact that you don't believe in these cycles the classical way. And he made an interesting point, and he said probably the most painful thing would be if the next cycle, if we would call them, or the next bull run, would just go slightly below or slightly above all-time highs. That's it. That would be probably the most painful scenario, especially if we break the all-time high, everybody's super bullish, we go to 100K, and then we don't. That would probably be max pain. And I could really foresee that. We had a brief conversation about the macro outlook for maybe the coming 10 years, and I guess that's a part where we both agree. It's going to be a very difficult environment to navigate. So maybe that inflation stays elevated.
Why don't we start with macro? Why don't we talk about what's going to be the best outcome for macro, let's say this year, and let's say the next couple of years, and what could be the worst? Like, let's talk about best case, worst case. Where do you see those?
Worst case is probably stagflation for a prolonged period, so elevated inflation and no real economic growth. So let's say choppy sideways or even negative growth in the, let's say, Western markets. So European companies and American companies that are just more or less flat or have sideways volatility or go down, and with inflation elevated. So let's say 4 to 6%. That would probably be the most difficult and worst environment to navigate.
Because I think what this would be is it would be a repetition of 2020 and 2021 and 2022, but way shorter. So people screaming now, we need, like, the recession is coming, we need more money printing. The Fed jumps in, prints money, everything shoots up, everyone's late to the party. Then suddenly they're like, oh, prices are going up, I need to go in. And that's when everyone is like, oh my goodness, inflation is coming. Bam, we need to get interest rates up, everything goes down again, everyone is late, and then you have this no company being quick enough to adjust. Yeah, I agree. I think
that would probably be the most painful.
I agree. Because then we're really gonna have, like, I think 10 years of sideways, this undulating and everyone always late, never being able, like, it's nothing is gonna perform well. It's gonna be super, super difficult to kind of navigate that. Yeah.
And the best outcome, I guess, if the Fed is, maybe they're going to hike another 25, maybe another 50, but we are about to enter a range where they feel comfortable in leaving the rates as they are. So if there is no credit event and the market just takes these high interest rates and can sustain them, so the problem is there is not a big difference if you raise the rates from 1% to 2% or from 1% to 4% in a short period of time. Because right now, as a company, if I say, okay, do I want to get more credit? My decision is the same if it's 2% or 4%. I'm just going to say no. No credit, because there's no cheap money. But the longer we go, the more companies or the more people are. So if you move, you suddenly are required to pay these high mortgage rates, or if a company needs to refinance, or so the longer we go, the higher impact all of this will have. And the best thing for the Fed is probably if inflation stays elevated, rates stay where they are, and the market is just taking it. No big credit events, no big sell-offs.
Housing makes it. I agree. There's maybe I agree. I think maybe having 1 or 2 quarters of a recession, but it's not like a super deep recession. It's just more like we see a little bit of a shrinking, but it's not like, oh my goodness, absolutely crazy. So that soft landing that the Fed actually talks about, that would be ideal. Yeah, there will be some pain. Yeah, there will be some pain. I think the key is you will have people screaming. You will. And then the Fed having not kind of going immediately in just because of housing going down a little bit, a few more layoffs. I agree.
Yeah. For investors, I don't know if this would be the best outcome. For investors, probably the best outcome is...
No, I actually think... Okay, you go your opinion first, and then I'll share mine.
Maybe a credit event within Q1 that something blows up. I don't know, Credit Suisse, just saying something, but like a Lehman Brothers moment where we have a sharp sell-off, a liquidity crisis similar to March 2020, and then we just go full money printing.
Then we have this... I really think then we go into the stagflation crap. I really think so. I really think the best for investors is to just be honest to yourself and say, you know what? We had 2020, we had 2021. That was ridiculous. That is just not real. That was a game. 2022 and probably the first half of 2023, we still need to counter that craziness of those 1.5 years. So now it takes 1.5 years to undo this, and then we can kind of go with normal kind of stuff again. So I don't know. It reminds me of, you go and you train really, really hard. You're sore afterwards. Like you have to expect that you're sore afterwards, and then you need to wait again until you can train again. And I think that's the same for me right now. So if we go now and we take something, right, so that I can train again, sure, I have peak performance right now, but then I'm gonna crash even harder. So I don't know. I just think for an investor, I think really the best outcome would be not to expect much right now, but sow your seeds, and then just hope that the Fed actually stays course as they promised, right? To say, I don't know, we peak at 5%, a little bit higher, it's not going to have much impact. And then slowly go down with interest rates because probably inflation is going to come down. There will be some signs of recession. The housing market will be a little bit shaky. Fed not printing money, but actually lowering rates. The lowering of rates, I think, is not going to be bullish for the markets yet because it will be as a reaction, not as a proactive kind of event. But we're going to see rates lower. And let's say we get rates to 2%, inflation back to 2%, and then we can start something as a soft landing. I don't know, from everything that I see right now, to me, that would be the long-term best outcome.
Is it likely?
Look, I'm not so critical of the Fed as most people. I think the Fed right now, is the Fed too reactionary? Probably. Should the Fed be like, have more data, better data, faster data, not change their stuff every 6 weeks, but do it on a daily? I think there's so much constructive criticism how the Fed could be done better. Have the algorithm, this discussion, right? I mean, so many people like think human decision making with money is corrupt, and they're right? But that doesn't mean that having a super stiff system that has no change is the right means. I think the right means would be to have an algo do this, right? Have 600 data points, they get adjusted every single day, and every single day, just like the Bitcoin mining difficulty. Honestly, I mean, it's just one data point, but at the end, it adjusts all the time, and it is this. Imagine if the Bitcoin mining difficulty would be stiff. It would be ridiculous, right? So, but it's the same to me with a monetary kind of system. So to me, the point would be, let's remove the humans and let's put a stiff algorithm that is visible and transparent for everyone, right? Put it in place. That is something, but I think in general, I don't know, the Fed over the last year, did it crash the market? Sure, but I actually believe it had to.
I agree. We are super overextended. If you look at all these price to earning ratios, especially within big tech, it was kind of a bubble. And we see all these companies like Netflix, Facebook, Tesla, they're all paying the price or going into a more healthy area.
Agree.
And after, like, it's you compared it with sport activity. Maybe you can also compare it with being a drugs addict. For the last 10 years, we had we were on drugs, on steroids for more than 10 years. Cheap money, almost free money, and this is not sustainable. And now we kind of need to pay the price for what we did the last 10 years. And in retrospect, it's always easy to say what should have been done different, but probably the Fed should have raised rates in 2015 or somewhere around that. But we practically went into the whole pandemic, into the whole crisis that we have right now, with rates being at almost zero.
I mean, one super interesting thing, and when I did the reflections a bit over Christmas, it was quite interesting to see that in mid of 2019, I was already when we had an inversion of the yield curves. So, I mean, we're talking about like a really long time ago now, right? It's like 3.5 years. And we already had an inversion of the yield curve. And generally, if that happens, that means 12 months, 18 months later, we have some issues.
Recession.
Correct. And what happened was COVID came, right? Which completely messed everything up. I think in 2020, doing some of the lockdowns in 2020, doing some of the money printing in 2020, I think that was reasonable. I think that was okay because we didn't know, right? And we had to kind of absorb some shocks. But I think then in 2021, late of 2020, 2021, that's when a lot of damage occurred. And so I think now we just kind of have to get back to the beginning of 2020, 3 years ago, and we're going to have a little bit of this kind of setback and flashback. I think one of the things that are really interesting to look at, the companies that actually did really well over the last 12 months, and also the assets, whatever you look at, are things that are really useful. It always comes back to the same things, right? And I think one of the reasons crypto crashed so much was because there is some use in crypto. But let's be realistic. I don't know. I'm just spitballing numbers. I think maybe the use is 5 to 10% of the purchase power. and 90% is pure speculation, right? 90% of the dollars that are in Bitcoin or in ETH or in DeFi chain, doesn't matter which coin. I think some coins probably 99.9%, and maybe some other coins are maybe 80%. The dollars that are in there are just numbers going up. So I invest $1,000 and all I care about, I want $2,000 back. That's all I care. And I think a very small amount buys Bitcoin because they really need it. There's no alternative to them, right? Because they live in a country where they really cannot use their local currency, and people there are actually pricing stuff in Bitcoin. The same with ETH, the same with DeFi chain. And you see the same with companies. The reason why, let's say, Tesla crashed so much is not because Elon did so much work with Twitter. And no, it is because the dollars that Tesla is spitting out, which is the utility of that company, right, were way fewer than what people were willing to kind of trade off as in other investments. You look at Berkshire from Warren Buffett, you look at so many of the super boring, super solid companies, they are actually plus. They made a return over the last year. And why? Because these companies always had price to earnings of whatever, 12 or 15, and they didn't get slaughtered much at all. Actually, some of them had better earnings because it was this kind of year. And so they did really well. And I think we're going to see this. Like, if I have one theme for 2023, it's going to be utility, 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 utility. People will kind of get, because there's no more cheap money right now, people are going to get reset to, I need to focus on utility. There will always be speculation, but I think that's going to be the trend for 2023. I don't know. What do you see there? Not so much, but what is, if you would have one word for 2023 or one theme for 2023?
It's, in my opinion, it's going to be a difficult year for most investors to navigate. So all of the, a lot of the people that started investing after the great financial crisis, so let's say from 2010 onwards, which is like a little bit my generation, or a little
probably many people,
my friends,
especially watching, listening. I agree.
Yeah, and if you look at, for example, our demographic on Cake, so we have a few insights. Of course, we know how old are you are, and most of you, like on an average, are approximately between 30 and 35, something like that. So
I don't think that's much of a surprise, because I think most of crypto is in, like most crypto, male between, let's say, 25 and 30s, so 25 to 40, right? So that's kind of the, like, I think probably 80% of the crypto investors are that kind of age range, yeah.
And the funny thing is, I was interested in financial markets during the great financial crisis, but I was too young to get it. I know there was the Fed, I know there was an interest rate, but I didn't know how all of these things tied together. And I didn't know, and we had this steroid low, cheap money environment where everything is just going up. And the main theme for the last 12 years was buy the dip. You know, it's up only. Stocks are only going up. There were like Dave Portnoy. I remember watching him, and he always said that only going up. Everything is only going up. And if you actually did that for the last 12 years, you did kind of well. If you just bought the dip, if you just held on, you're like up 300%. If you just invested in S&P 500. And I guess there is this big trend change coming now, because there's so many things playing into each other. And the thing we briefly touched on before we started the call is we have a big demographic problem here in Europe, which our demographics, so the people between 18 and 65, so the productive part of society, they peaked in 2019. So for the next 20 years, because we already know how many babies are born for the coming 20 years, so this means until probably somewhere around 2040, more people are leaving the workforce than entering the workforce. And you have three factors. So you have, we either are the same amount of people consuming more, so consumption. We are the same amount, we are more people, so you have growth, demographic growth, which is not the case. We have, so the demographic decline. And the third thing is productivity. And the productivity is a little bit the variable in this equation, because we have things like AI is going to be a super big trend, and it can do a lot for productivity in a good way and in a bad way at the same time. And we are kind of starting this new phase, and where Julian and me are kind of agreeing is that the next 10 years, the challenging thing could be that there is a lot of sideways action. that we don't really take out the old all-time high. So
Can I clarify one
yeah.
thing? That there's on a big picture, there's sideways, but if you zoom in, there's these aggressive ups and downs, and every time there's these ups and downs, people are caught on the wrong foot. But on the end, it's just sideways. I just wanted to clarify that.
100%.
Yeah. So it's not like no percent, no percent, no percent. It's like what we're seeing right now. Crypto 20% up right now over the last week, right? And everyone's like, "Oh, this is the next bull run," and I'm super skeptical of that because I don't understand why. And so I actually think we're gonna see 20% down again, right? As like in an extreme way. But then if you look at the big picture, it's like, nothing really happened.
Yeah, 100%. And that we see these rallies, so up and down, but as an overall, so what a lot of people did over the last 20, 30 years is a 60-40 portfolio. So you have 60% in an index, in S&P 500 or whatever, and then you have bonds. And both of them are very unlikely to outperform elevated inflation and low economic growth. So if you just allocate into a 60-40 portfolio, you're probably going to end up with less than what you started with. Look, maybe you're not going to get a haircut of 30%, but that you just is slowly, painfully losing 2 or 3% every year, and for a multi-year period. But there is definitely opportunity, and maybe we can touch on what the opportunities are, because if you're not investing in big indexes and not having a 60-40 portfolio, but if you're going the direction and investing into utility and actually place maybe, AI or a specific region, like I'm just throwing a few things out there that so China maybe could be interesting, or emerging markets, or India, because India has still a good demographic trend, as does Africa. And China, they just had their reopening, they have Chinese New Year, so there could be short-term trends, short-term things that actually could be super bullish, and their money will be made in different places, or in industries or sectors like artificial intelligence, like right now, probably, I don't know, Microsoft or Google, a company that is investing heavily into artificial intelligence and actually brings out a product where they can earn money on, something like ChatGPT. So these things could be super interesting. And what I briefly touched on with Julian, me, I'm super bullish on metals, where we kind of disagree a little bit.
Yeah, I think the disagreement is I mean, I don't know. I think on a lot of things, I'm just a super simple kind of person, which is like let's say on gold, right? I'm not saying that I have zero gold. I have gold. But the reason I'm probably less bullish on gold is not because of the price. The price actually may do really well. You may be right there. But I just don't understand. And I have never met anyone who actually used gold or uses gold, right? And I don't see I don't understand when I would ever use gold. And the example that I made was I see the only time I really see the use of gold. I know there's a little bit in industry, but let's discount that. I think to me it's really jewelry. I see that part, right? And I don't see that part to go away. I think that's too deeply ingrained in history, so I think that's fine. Again, small part, but still, there's some there. At the other part where I saw it was presents that I got from my grandma, like, I don't know, a 16th ounce of gold for a birthday or as a special gift or graduating. And so and I totally see that, this emotional aspect, right? So I definitely see that. The rest, to me, it's so much speculation. And when you put gold next to even the S&P 500, right, which is like one of the most boring indexes to invest in, the S&P 500 over a 10-year time frame just slaughters gold, right? I know commodities. There's so many people who are so emotionally invested in commodities. Same thing. Like, you put commodities over the last 10 years, just from a gut feeling, I don't know if you actually know the number, over the last 10 years, how do you think commodities did, even after this entire massive run right now, over the last 10 years?
So I know gold, we practically had zero growth.
Let's do commodities, like really a basket of commodities, GSG, like an index or something. Do you think it's up 10%? It's up 20%? I think M2 over the last 10 years is up, I think, about 100%.
Okay, I would say commodities are probably up 30 to 50%.
Down 20 or down 30.
Oh, wow.
Right? So down. So it's just crazy to kind of consider this. So even after this entire rally, right? So down. So to me, that's just nuts to kind of see this. And I think people forget that a bit, right? They are, and and I think where this is coming from, and I understand where this is coming from. Investing into the S&P 500, and that's actually a fallacy that many people in investing have. Investing into the S&P 500, there's nothing special about it. If you tell someone, hey, I invest in the S&P 500, you're not special. You don't gain status. You're not someone like that. Someone says, really? Like, wow. No, everyone's like, okay, fine. However, if you go and say, hey, you know what? I'm building this position in silver because silver is super manipulated. It is so manipulated. The media is against it. The national banks are manipulating it. The trading floors in London are manipulating it. You're special. You are like, you have the special insight. You're different to everyone else. And you surround yourself with people, with the small group of people that also has that kind of belief, right? Which we as humans, we love that, right? You love that. There are certain, this status building, but many times, right? And people forget that being a good investor is actually the least status during the investment process, because you have to make investments that are really difficult to make. You're really unpopular, and you actually many times you have to just be right when other people are really wrong, and that's the difficult part. It actually, yeah. So that's why I'm struggling with such investments, because I just the example I gave, right? We all have these, it doesn't matter, social groups, political groups, where we completely disagree with their views, right? I think all of us have that, right? If you're more left-leaning, you have this more for the right wing. If you're more central, you have this for all the extremists. If you're more right-leaning, you have this for the left wings. You have these ideas where you just sit there and you're like, this idea makes zero sense. But the principles that you use there are, like, let me give you the example, like communism. I am definitely not a left-leaning person. I have friends who truly believe communism could work, truly. And whenever I argue with them, I sit there and they say, no, but we have never done this right. And I'm like, give me just one example where it worked, right? They can't give me one example, but they can make 6,000 excuses on why it would work and why it could work. And so if you listen to this and you're also more left-leaning, you're like, yeah, Julian, you're totally wrong. Like, we could do this, right? But if you're more, let's say, center or right-leaning, you'd be like, yeah, I mean, come on. Like, never gonna happen, right? But you're gonna make that same argument on whatever you believe in. So if I'm just using that gold argument, I don't know anyone who has used gold in their life. I have not used gold myself. I don't understand the world, how it would work. And that's why I don't invest like major amounts of my net worth. That doesn't mean that I don't invest a few percent, because I actually think as an insurance, this can be totally right. But then the gold bucks, they're gonna say, yeah, in the last 80 years, we've never done it. But, right? And then it could be, and this could be, and it's like this typical like Peter Schiff thing, right? Where it's like, and I don't know, I just sit there and I'm like, yeah, to me, that's exactly the same argument as those other ideas. That's just where I'm coming from, right?
I get it. Yeah. Maybe to take the counterpoint there.
Yeah, sure.
Why? Because I have in full transparency, I have a big allocation in gold, like really sizable. About a third of my total net worth is in gold right now. And for me, I have many reasons to. So historically, when we enter a recession, metals are the first to recover. Gold is not a 10-year allocation for me. Like, I agree on the 5% allocation that is just as an insurance, physical gold, because let's just say everything goes to shit, you need to leave your company and you need to pay or bribe the border guard or whatever, or everything goes to shit. Gold is probably the best thing to have. Physical gold, gold coins, silver coins, but it's just, this is I never want this reality to come true. The other investment, this is for me an ETF, a miners ETF, junior miners ETF, GLD. It's historically, after, like, both during inflationary times, so for example in the 70s or in the 30s or whenever we had a recession, gold was the first to recover, and it recovered extremely strong. And a lot of people don't know that, but
I just want to look up the chart.
Yeah. For example, from the 90s into the early 2000s, gold did a 10x, and gold can perform super hard. Like it usually can do it did 9x, it did 3x. It can perform extremely hard in a short period of time. And usually this is right when we leave a recession, gold is the first to recover. And of course, right now we have an extremely interesting technical setup. So gold is building a 10-year long cup and handle. I know I'm not really. So we had here in from 2006 to 2012.
Yeah, massive rally.
Massive rally, 3x, 4x.
Yeah, 4x probably.
Yeah, more than 4x. And right now we had a 10-year period where we didn't do anything, 12 years almost. And from a chart perspective, we are forming this cup and handle, and not for everybody that believes in technical analysis. You guys will know what I'm talking about. I'm not a strong believer in technical analysis, but I just use it as an additional thing to look at. And right now, I'm strongly under the impression that there is a big shift happening on a worldwide. So we are moving away from the dollar as a reserve currency. And there will be different moves. Some countries will try CBDCs. Other countries are trying Bitcoin, like El Salvador or African countries. But a lot of countries, they will go into the direction of gold. We already can see China, India, Russia, they're stacking up on their gold reserve. And not everybody will do that. Probably the West is not going into that direction, but there's other countries that will go into the direction of gold. And I'm not expecting to make a 3x or a 10x on my gold investment. I just want to keep what I have. And then when the sideways choppy period is gone and we have a little bit of a better outlook, then maybe I reallocate into a bit more riskier assets, maybe back into an index, maybe back into Bitcoin. But for now, I see very little downside in gold and I see potential upside. So for me, it's, but what's also, and in full transparency, you know me, I'm a little bit of a gold bug conspiracy theories and most of all, sound money advocate. So I just love Bitcoin and gold because these two are the best things we currently have when it comes to sound money. And there is some ideology in my approach and in my investment. I know that this is not healthy, but sometimes I just ask myself, for what am I, like I want to influence certain parts, so I want to win in those two regards. And I really feel that sound money could resolve so many issues. And with a part of my investments, I want to influence the world going into that direction. So that's, for me, it's gold. For me, it's Bitcoin. Yeah.
Let's talk crypto a bit.
Crypto.
What do you think are going to be the trends in crypto for 2023? What do you see what are going to be the winners? What's going to be the losers? Doesn't have to be so much on the coins, but the trends and the kind of mindset, the shift. What do you see?
So I would compare 2023 probably to 2018, 2019.
Yep.
So bear markets. I'm not expecting big moves this year. I would be extremely surprised if any crypto coin is breaking all-time highs this year. So in the top 20, probably no crypto will break its all-time highs. Of course, there might be this one outlier.
And that's always an outlier, but yeah.
Yeah, maybe a new dog coin or something, but you never know. So where we probably agree is utility. So in bear markets, the big difference between coins and projects is you can really see who is here to build and who was just here for the hype. And there will be, in Germany we say,
what do we say in German?
Wir trennen das Spreu vom Weizen.
Yeah, the good will separate from the bad.
The good will separate from the bad. So I think it's one of the metrics that it would be super interesting to follow along is look at GitHub commits. Look at what projects are still building, are offering utility, and are not just throwing the bag on a table and leaving.
I completely disagree on that.
Oh.
And you know why? The reason why I completely disagree on that is because doing work is not always useful. So I think those GitHub commits are such a fake metric. Now, of course, if you're doing useful work, then those GitHub metrics are fantastic. So it's not that they're automatically bad, but you have to be really, really careful on that. So to me, you can have these really vaporware things where people just work on shit. It's like you build on shit, you produce more shit, it's still shit, right? It doesn't matter how hard you work on that. So I really think the GitHub commits are one factor, but I would love to see it in a context. So to me, if you would give me one metric, then it's not so much the GitHub commits. That to me is on top. To me, it's actually two things: usage, actually daily usage, and fees. And I know that this is so counter to an open system, but when people are willing to pay for something, you know that they find utility in it. It doesn't mean that just because they're not paying that there's no usefulness, so that the opposite is not necessarily true. But 100%, if you are willing to pay for something, you're only doing this because you want to. And so what I would watch is, where do you see where do you see daily active usage and fees? I really think that's key. And then if on top I see GitHub commits, then I know, okay, you know what? Like, there's people using this stuff. People are willing to pay money to use that stuff. And they're building. That is where I would really kind of come from. Like, I'm totally not on that ship that, like, the best coins are those that are free or the fees are low. The fees can be low if millions or hundreds of millions of people use it. But if someone has to pay for it, right? So where's the fee coming from? Sure, I mean, Bitcoin or other coins, they DeFi chain as well, they just like pay with inflation. That's fine as well. There's a fee to that as well. But there's a cost. There's not necessarily a fee. But
do you see any legit trend outside of, let's call it, the blue chips? So I would say Bitcoin and Ethereum.
They're the only two, I think. And
they're the blue chips.
I agree.
And you probably, if you're in crypto, you're probably holding both of them. And if not, you probably should. At least that's my opinion. But other than that, do you see any legitimate trends or things that you're watching closely?
I am a big bull on, and I really think, like, from a DeFi chain perspective, that should be the direction DeFi chain has to go, which is layer 2 Ethereum, layer 0 connecting Bitcoin, Ethereum, building bridges, helping to kind of bridge both. And I know that if you're an Ethereum maxi or a Bitcoin maxi, you're completely against the other idea, right? But I'm someone who thinks both have fantastic ideas in its own. And I think then there's going to be a lot of projects needed that are going to bridge both advantages and both upsides. So the layer 2s, layer 0s, connecting, I think that's going to be really, really key. I think big losers for this year are those projects that don't have any utility. And I know I'm going to make a lot of hate with that, but I think the gaming coins, I don't know. I never held a gaming coin. I was never bullish on those. I never understood the utility of that. I don't know. I would be super surprised if the gaming coins are going to do well. And I know there's so many fans of that. I just really think people have never used those coins. I don't see a use for those coins. I don't know. So that's probably the big two opposites that I see, right? So I think the big winners this year are going to be layer 2s, layer 0s, connecting, not trying to kind of reinvent their own thing, but kind of levering up the use of Bitcoin, helping with the downsides that Bitcoin has, which is a very limited utility, very limited scaling, basically going into the second layer, right? I'm not the big bull on Lightning, but I think Taro with DeFi on Bitcoin, I think that's something that can really help there. On Ethereum, same thing, scalability, layer 2s there, specializations, and bridging those two. I think that's going to be the big winners. I don't know, what do you see?
I guess it's going to be super interesting to watch all the, let's say, the hype that we had over the last 3 years. So this is Web3, Metaverse, meme coin, NFTs. These 3 areas, they had their first cycle. And there's definitely some legit things among the sea of maybe not so legit things. And it's going to be super interesting to see what rises out of the ashes. And there probably won't be a lot. But the things that will come back are probably very, very interesting. And the easiest thing to spot is like I would have looked at GitHub commits. Maybe I'm going to rethink that approach.
I just don't think that. I think the statement of it has the most commits, so it's useful.
Yeah.
I think that's just a wrong connection. So I think if something is useful and has a lot of commits, I think that's way stronger than a project that is useful and has few commits. So I think you're not wrong, but again, it's like, yeah, just because all crows are black doesn't mean that everything that's black are crows, right? So it's kind of that generalization.
I'm kind of so I'm not a big believer in NFTs, at least not just holding a monkey picture or something like that. Okay, maybe the blue chip things, the Bored Apes and yacht apes or whatever, or Ethereum stones or whatever, they're probably gonna keep their value. But a lot of it probably will never come back, and it was maybe a little bit of a one-time thing. But
that's probably, isn't that the same on probably on all, like on most projects?
Yeah. I agree. But I'm interested in what is happening to the overall NFT space, in what kind of direction that this will move, because it is something that is interesting. A non-fungible token that you can send to somebody that declares ownership. It is an interesting concept. I just don't think we saw the final form of it yet. We had an early taste of what it could be, in which directions it could go, but the final form, maybe it will crystallize a little bit more over the coming 2 years or so. So for me, bear markets are actually very easy because, as most people know, I just stick with the big boys with major allocations. And what I did in 2018 and 2019 is just I dabble with play money into things that I think could be interesting. Yep. So last time for me, this was, I dabbled a bit in Cardano. I had a little bit of, I think, Avalanche, Polkadot, and I bought Solana at one point. But for me, these are just... I think Nassim Taleb wrote a book. It's so hard to follow along with a project if you don't have any skin in the game. Yeah. So for me, it's just a few $100. I throw it in there, and it just makes me follow the news. So if I see a headline involving the project, I'm more likely to read the article and to get to know it a little bit better when I have some skin in the game. So I want to do the same thing this year. I just want to have an open mind. I want to look around a little bit, maybe some play money, because a lot of these projects are down 90%, and some of them will recover. And yeah, it could definitely be a very, very interesting. So fun fact, for the last bear market, Cardano was actually the best trade I ever made.
Really?
Overall ever. This was, for me, was...
You're saying that as a Bitcoin fan, huh?
I don't like Charles Hoskinson, and I think Cardano's interesting, but it was a trade for me, and I bought at 3 cents and I sold at $3, a clean 100x. I never did that before, and best trade I ever made. Wow. XRP was the worst.
Oh, really? Okay. XRP was one of the best investments I've ever made in 2017, but since then I've never been holding it in...
No.
Other than homeopathic doses, so...
No, I bought at 250 and I sold at 20 cents.
Oh, no. Oh, no. Oh, no.
Yeah.
Okay, let's talk about 3 coins, and let's kind of talk about what has to happen for them to outperform the market, what has to happen to underperform. Let's talk about Bitcoin, Ethereum, DeFi chain. I think these are the 3 major coins that people are holding on the Cake platform. Yeah. So let's not talk about price predictions, because I think that's not a credible kind of predictor, but let's talk about in comparison to the average of the crypto market, right? What do you think has to happen for Bitcoin that it outperforms or that it underperforms?
Yeah, so historically, at least last time in the bear market, is Bitcoin always holds up slightly better.
And it did this year as well. Yeah, even though many coins actually did really well against Bitcoin, in the broad market, Bitcoin has definitely outperformed the rest of the market. Yeah.
And it's very likely to be the first to rise. So if you go back to December 2020, Bitcoin rose before everything else. Of course, all the other coins caught up.
It did on the 2nd of April, 2019. Yeah, it did as well. It was the first one to pump, and then the altcoins pumped afterwards. Yeah.
Yeah. So my expectation is this time is going to be similar, maybe not perfectly similar, but so it's going to hold up fairly well. It's not going to drop as much as others. outperforming, it probably...
No, but that is your case for outperforming, no? It's more of when is it going to underperform?
Yeah. I don't see Bitcoin underperforming other crypto assets during the bear market. I'm expecting it to hold up better and to rise faster, but it's just the first part. In a secondary part, everything that will catch up. So if we are entering a bullish phase, if we are entering a phase where everything pumps, Bitcoin will probably not pump as much. You will probably, it depends a little bit. But I know that you feel that Ethereum could outperform Bitcoin.
But I think, okay, so I have to be careful, right? That's just Bitcoin and Ethereum.
Yeah.
That doesn't mean the question here is not Bitcoin and Ethereum. The question here is Bitcoin versus the top 20 or the top 100, right?
yeah.
And there I 100% am aligned with you. I think the big underperformer is still the reputation as proof of work that is... Like you see this left and right. You see XRP doing a lot of promotions against Bitcoin. It's like, yeah, exactly. And so Europe, I think, debating, thinking about if like because of the carbon print and so on. So I think that is still the big question mark, I think, for Bitcoin, because it is kind of the sore thumb sticking out as the only one that has proof of work with its strengths and downsides. So I think to me, that's the big, I agree with you. I think that's the big question for 2023. With the rest, I agree. To me, it's not that I'm not comparing Bitcoin and Ethereum here. I'm just really comparing Bitcoin, let's say, with a basket of 20 or 100 coins.
For Ethereum, I would say the interesting things.
There's another underperformer I wanted to mention as well. That is Mt. Gox. That is not even GPTC, so not even Grayscale, because I think Grayscale is going to cause such a ripple if it really has to unwind, that it causes such a ripple in sell-off that I think it's really more Mt. Gox, because that is very specific to Bitcoin, where Grayscale really is going to hit a lot of the market. It's going to hit Bitcoin, it's going to hit Ethereum, it's going to hit a lot of stuff, where Mt. Gox is very specific to Bitcoin. So that is the big question mark. Yeah, it got delayed right now. I think it's delayed to at least the summer, so who knows? And again, it may get delayed 5 more years.
Probably.
Okay. Ethereum.
For Ethereum, I guess the interesting thing, or the thing that is not unwinding yet, is a large part of Ethereum is actually staked. And Shanghai, so the upgrade that will make it possible to unstake, is not written yet, and I think we don't have a specific timeline yet. It could be this year. It could also be... I think
goal is for Q1 this year, but again, big question mark.
Yeah, because usually their roadmap is always delayed a little bit.
Just like most,
And the interesting thing there is going to be, so the beacon chain, I think it started very, very early. In 19 or in 20, you could already lock up your ETH. I don't remember actually when it started, but it was a multi-year period where people were able to lock in their funds, and a lot of them actually and they're sitting there now and they cannot sell. So what is going to happen if the unstaking is possible and a lot of people can unstake? Will they sell? Will they keep it in there? Will there be a price impact? I don't know.
I do think that the unstaking is bearish for the price.
Probably.
I think there's a lot of people trying to sell this, especially the Ethereum maxis. They try to sell this as, now it's liquid, so that means there's more people gonna come in because they don't feel pressured that they can't leave anymore. I mean, I do see some merit in that argument. Really, it's not like I'm not seeing that merit, because I do believe that being locked in, it kind of keeps you from staking. But the point is, I don't think people will buy Bitcoin to do that. It's the existing. So price is all about supply and demand of outsiders versus insiders, not inside, right? And so the people who are locking up ETH to stake, they don't affect the price. It's just that they're not selling. I think there's going to be more money that wants to come out than in. That's just, and I agree with you.
Yeah. And the second thing is, and this is still a question, and we have a little bit of conflicting information. So I'm 100% sure regulation, especially in the US, is about to come. And I would say there is maybe a 60% chance that Ethereum is regulated as a commodity under the CFTC, and a 40% chance that they are going to be regulated as a security under the SEC. And we just don't know because there is conflicting information. Some people say this, some people say this, but the adoption, we are so far along the way. And the adoption, especially in America, like the corporates and institutions are tied in. And Gary Gensler said it himself. In the beginning, it was probably a security. Right now, it's probably more like a commodity. And I guess it also depends a little bit on the actions of Vitalik. And I can really foresee that Vitalik is going more and more into the background, that he lets go much more of roadmap, and that he's just like right now, he's a high priest.
Yeah.
And that he's more of a, I don't know.
More of a symbolic figure and
Yeah.
not so much of a actual opinion leader. Yeah. I
Yeah.
agree.
Yeah. And these are a little bit of the variables.
Bearish factors.
And if they get regulated on as commodity, oh my God, it's gonna be super bullish for Ethereum, like crazy bullish. If they're gonna be regulated as a security,
it's gonna be mega bearish.
It's gonna be bearish, but it's gonna be especially difficult for, I don't know, Lubin and Vitalik and for all, because then they need to make a full disclosure.
Yeah.
For who has how many, what prices and all of these, and this could have a little bit of a backlash. It's not going to be the end. It's not going to be a doomsday and Armageddon scenario. It's just
Agree.
Yeah.
I think the big bullish factor for Ethereum, and I think that's the big advantage Ethereum has, it has the majority of the liquidity for DeFi, for NFTs, for DAOs. It has the majority of liquidity. I think it has the majority of developers, majority of projects. So I think that is also the big, like how much utility is going to come there, how much people are going to recognize of utility there. I think that is a strong bullish factor. I really think that.
I have one question that I'm really interested what you think. So the last bull run, we saw all these Ethereum killers, smart contract platforms, and everybody was there to flip Ethereum. But it didn't happen. Ethereum was could easily hold its spot, and it even it dug in itself even deeper. So it do you think the next cycle will have the same story, that a lot of platforms will say, I'm an Ethereum killer, or they're going to compete with Ethereum? Or you think that Ethereum is kind of moving up a level and Bitcoin and Ethereum are just in another league?
I think I wouldn't invest into a Bitcoin killer. I wouldn't invest into an Ethereum killer. I never invested into a Bitcoin killer. I have never invested significant money into an Ethereum killer. I think there's one exception at the moment, that's Solana, for that simple reason, not so much because it wants to kill Ethereum, but because Solana had such a really kind of ground shed moment with Sam Bankman-Fried and FTX. So everything is really, really down. If they can, I think my position in Solana, if I still have it, I think I do. It's like negligible, really. So unless Solana does another 100x in comparison to the rest of the market, then it becomes relevant. Otherwise, it does not matter. So if it's a big if, and really, this is not a when, it's an if. If Solana manages to recover in comparison to the rest of the market, it could really be extremely strong. But because then you can kind of say, hey, you know what? It actually does have a lot of inherent power, and Solana fundamentally is differently structured than Ethereum. So that is a powerful kind of tool. That to me is the only big question mark. I would not bet on it. I would rather at the moment bet on Bitcoin, Ethereum, and protocols that kind of try to connect, unite, build on top of. I see way more value in that. I think doing something that is against Ethereum, I don't know. I just don't see the utility in that. I think it's so difficult.
Agree.
DeFi chain.
Yeah. So there is one, exactly 1 year ago, we didn't have the issue that we are having right now with DUSD. So DUSD is part algo and part crypto-backed stablecoin. And it's a bit very special in how...
Actually, a year ago, DUSD was the reason why everything started hyping so much, because everyone was creating DUSD, burning DFI, because there was so much demand for DUSD. Yeah, so it was actually the exact opposite. Yeah.
And then we had so the DUSD depacked. It went under the dollar. It went back to a dollar. It went under the dollar, and a lot of measures have been taken to bring it back to a dollar. And this is just my opinion, but an algo crypto stablecoin that is working as expected and holding its peg even in downtimes as we had them last year, and is the holy grail.
Yeah,
If
for sure.
if and for me it's not really a question of if, because there's so many smart people and intelligent people working on solutions, and we are really kind of getting there, especially within the last few days, weeks. A lot of measures have been activated to bring back the price and to burn untethered tokens and so on. So for me, this is like we need to address this issue, and we are. And as soon as this is done, I can imagine a lot of positive publicity, because you just need to imagine it. There were so many other algo coins that were completely devastated. Just look, for example, at Luna. If they have a DPEG, a lot of them they just went to zero and never recovered. And DUSD could actually hold up quite well over a prolonged period of time. We're like it's 13, 14 months
Close
old.
to 70 cents at the moment. I mean,
Close to
not
70 cents.
ideal in comparison to the dollar, but
No.
comparing it to the entire year, it's yeah, yeah.
And so two things that are like I'm not expecting big price movements in DeFi chain, in Ethereum, or in Bitcoin this year. But if we fix the fundamentals this year, so we're gonna have a repack, we're gonna have the launch of
DeFi Metachain,
DeFi Metachain, and
ERC20 bridge,
interoperability, and this is basically the fundamentals.
connecting into Taro on Bitcoin.
So we're touching exactly into the thing that you said with utility and bringing other protocols together. And just what is the most important is we are actually, or DeFi chain is bringing together the two biggest protocols there are. So, or three, BNB, Ethereum, and Bitcoin. This is where where like 70% of the whole market is, and it's going to tie all of these together. And my big, just to finish it up with some hopium before I pass it on to Julian, is DeFi chain was flying under the radar for 2 years, 3 years almost. In May, it's going to be. This is
3 years.
3
Yeah.
years. There was
May 20th was the first block. Yeah.
there was never this ultimate hype moment with Binance listing and everybody's talking about, which like a lot of top 100 coins, almost every top 100 coin had this highlight, this day to shine. Where you have this crazy public run-up where everybody's talking about it. And DeFi chain was practically flying under the radar for 3 years, which is great because it gave the whole team time to build and to develop. And there was a lot of development because it is a DEX, it is DeFi, it is interoperable, it has atomic swap, which I hope is going to be reactivated this year. So many things, great tech. The only thing that is missing is the attention. And I'm certain that this could be like the 2024 moment. And the thing that it's interesting for me to watch is it's DeFi chain's first bear market.
Yep.
And of course, like I had a few conversations with a few of my friends, and what to expect if a cryptocurrency is entering a bear market. You expect minus 90%. And we're holding up right about at the 90% mark, exceptionally well. So I guess this is expected. Now it is how are we going to rise out of this period, and of course I hope that this could be similar to what Cardano did, for example, in 2020, 21. So this is definitely what I'm watching. And what's as a side note, what I see happening in the community, because I read Telegram a lot, the opportunity to have a say in the future development of DeFi chain became exceptionally cheap. So right now we have a token price of 40 cents, which means for a full masternode to have a say in the future development of the chain, it costs you about $8,000. And I see a lot of people making use of that opportunity, which I find very, very interesting.
I have actually not much to add here. I completely agree. I think the big issue for 2023 for DeFi chain is to solve the DUSD peg. It's unlikely, but if there is a massive DeFi regulation anywhere in the world, especially Europe or US, Doesn't look like it, but that would obviously be difficult, right? But I think it would hit all the DeFi projects. That is I think a big thing to watch. Doesn't look like it, but yeah. The bullish things, obviously, the opposite. Pegging, and DeFi, Bitcoin, Ethereum connecting, DeFi Metachain launch, the ERC20 bridge with all the liquidity. I think I agree. In general, for me, right, I'm really, really bullish on Ethereum, really, really bullish on DeFi chain. I do believe Bitcoin is gonna actually outperform the rest of the market. I agree with you there. Yeah, not much to add. Anything, we're over the hour, so wanna respect it as well. Do you feel anything else we need to say for 2023?
Maybe we can sneak in a sneak peek what we will focus on Cake. We had last week we had a yearly kickoff, so we said these are our goals. This is what we want to do internally, and so this week is the first week of full power. Everybody's back on, all hands on deck. Maybe we can share a few of our not very.
Yeah. I think the big themes are going to be for the entire year on Cake to add large coins, large blockchains to the platform.
How many?
Don't want to fixate on, but we're going to try to add like the large coins. Obviously provide cash flow on those. I think there's going to be a lot of cross marketing between those coins and between the existing coins. So anyone that's scared that that's gonna remove focus or attention from DeFi chain is completely wrong. It's gonna do the exact opposite, right? Like we are looking into adding a new coin this month, and so adding a new coin here is gonna obviously bring attention to that coin, but that coin is larger than DeFi chain, and so we hope that there's going to be a lot of cross marketing there. And we try to do this with all the coins, right? So that's going to be a key focus. One other focus is we want to really focus on the valuable customers on our platform, really get good in the analysis in the business model where we go and say, look, you are a customer, you're really valuable to us. And valuable can mean that, I don't know, that we make, I don't know, $50 or $100 a year on a customer, and then really go in and make sure that we deliver even better service, better tools, better ideas. And the more valuable you become as a customer, that you get even more. So really kind of double and triple down on the existing customer base. So I think for those of you that have been with us for a long time, have funds with us and actually have been using us, that you actually benefit from us even better. We have some good ideas on that. So I think it sounds a bit waggy, wishy-washy right now. I understand that, but you're going to see that there's going to be a strong focus on that. And I think the key thing is also going to be really creative and flexible with product structuring. We have some really nice ideas when it comes to cash flow products that may be possible. I don't think other companies or platforms have listed those. Don't want to go too much into detail on that, but that's going to be like, yeah, just really kind of focus on that. And I think once the DUSD system is fixed, then really double and triple down on D tokens, because there's some really nice ideas there. And so, yeah, that's just what I see for 2023. We're still growing. We are adding team members. We're not firing. We've been very cautious. So I think we're doing well there. Yeah, cool. Nothing else, then Fabio, thank you so much. It was really nice having that in person. For you, I hope you got value out of this. One quick notice, I did mention this a couple of times now. I did send out personal emails. I will keep doing that. I know some of you were really surprised, even internally. If you also want to get those emails, I'm trying to send out an email later today where I talk a bit about my personal current portfolio right now. So if that's interesting to you, you can go to cakedefi.com/CEO-newsletter. Maybe we can get the link in on YouTube and on Twitter or wherever you're watching this. Yeah, I do send out those emails. They're going to be very personal, very casual. Be careful that you don't get scammed by anyone else faking those emails. I will not ask you for money. I will not ask you for Amazon vouchers. I will not ask you to send me a Bitcoin so I can send 2 back to you. Don't worry. So it's really just only useful stuff. Main reason why I'm doing those emails is just because I see a bit of a trend down on most social media. Even Twitter, in my opinion, has been suffering a bit. I don't think that's Elon. I really don't think. I think it's just a general kind of wishy-washy at the moment on social. Maybe it's also a bit of a social media fatigue on my end. And so I made a bit this commitment over the new year that I really want to focus on email. I haven't done that since 2016, so in 6-7 years. And so, yeah, take a look there. Otherwise, I hope you're tuning in next week again. Subscribe next week, Tuesday as normal. So we're back to a normal schedule. It's just this week. We did it on Wednesday. and we're gonna do those on a weekly basis. Yeah, follow, click subscribe, and have a beautiful week. Stay healthy, stay well, and see you next time. Thanks so much.
Thanks.
It was nice. Awesome. Cheers, guys. Thank you so much. Bye-bye.
Bye bye.